Hello guys, I'm Mariano, the Trading Parrot, and in today's video I want to talk about the difficulties that the 4-hour time frame is having at the moment. We are seeing a breakdown yesterday, Saturday morning, on the 4-hour time frame that came together with the longs stepping back after hitting 99k. We are also seeing a breakdown on the longs on the 4-hour time frame, but things are not as simple to make a full decision just by looking at the 4-hour. In this video we're going to look at the daily time frame and the weekly time frame as well, and do a follow-up on the long that we are currently running on Bitcoin. Guys, if you like this type of content, make sure that you're subscribed to the Coin Bureau Trading channel. Together with Dan and Aaron, every day we put up to 3 videos covering Bitcoin setups with altcoins, tutorials, and everything to do with data-driven technical analysis. And yes, my last video in the channel was 5 days ago. That's because I took a short break during the New Year's period, and as you can see, the title of the video was I am buying. I published the video revealing my entries at 91k. That was the first entry. Since then, the price has made a move to 99k. The video got a lot of hate, and that was great because typically when you're taking a contrarian stance in the market, you're going against what everybody's telling you. People tend to get very upset, and in particular, the bears that were watching that video, you can go and watch it, read the comments, and this is a great alpha. Whenever I take a contrarian target, if you see in the comments a lot of hate, particularly from those that are in the opposite side of the market, that increases the chances for the alpha to actually succeed. Don't be silly and think that because they are commenting that I'm wrong, necessarily it means that this is a democracy. The more people with the same comment tend to cause the opposite effect in the market. Always remember that most of the people lose. So by hearing a lot of people saying a single thing, it doesn't necessarily mean take the opposite trade automatically. But sometimes when we contrast data and we see that the chances of a move goes in one direction and we see all the people saying the opposite, we could be in presence of a great setup. And I hope that after watching the video you ended up being on the right side together with me. Guys, if you're a hardcore Bitcoin trader, you must be on top of what the price action is doing, and you like data-driven decisions as well, not just for Bitcoin but also altcoins. Make sure that you're subscribed to the Trading Parrot as well. This particular video is going to be a follow-up to these 3 videos I published in the past 2 days. Particularly this one new 100k selling wall is 40 minutes of catch up in the market, including the monthly time frame, weekly time frame for Bitcoin, and I'm sure that together with the one from yesterday you're gonna find a lot of information that is very difficult to find anywhere else. At least I personally don't find it anywhere. So if anything I mentioned in this video sounds a little bit new to you, be aware that I have covered that extensively in the past 2 days, but feel free to leave a comment down below if anything is not very clear. A great idea is also to follow me on Telegram. Many of the people that have been watching the Trading Parrot for a very long time are all subscribed there, and they do a great job helping me to teach new people and onboard them into this trading style. You can find the links in any of my videos in the Trading Parrot channel. So leverage squeeze, the signal was calling for a top around here. We still cannot confirm if this is a valid signal. I already explained that leverage squeeze doesn't necessarily get everything right in a bull market when it comes to sell signals, but we are monitoring it because this is in confluence with the other signals that are saying that the longs are very exposed at the moment. For your awareness, in my previous video I explained that I'm in a long from 91.8. I made public my entry in the previous video in Coin Bureau Trading, and I'm still holding on to that long, and I'm well aware that there is a very tempting liquidity for the market maker to crash the market to 88, 89, and I have a plan for that. More on that in a minute or in the previous videos from the past 2 days. MACD is about to confirm a bullish cross, slightly below the 0 line. You can see it in here. The histogram has already turned into green. Last time we did that, we lasted just 2 days, and it was a massive fake out there that, contrarian to what we saw at the precise day in 2020, it couldn't manage to continue to the upside. In 2020, this bullish cross continued higher in a very impulsive move. In 2024, a fake out, and now a bullish cross from below the 0 line. So hopefully the daily is gonna come at the rescue of what the 4-hour is having. 4-hour is calling for a pullback. Daily is starting to show some strength and some promises that we could go higher. So we need to be contrasting these conflicting signals. That is the job of the trader. You look at different time frames and you try to understand if the 4-hour with the pullback is just gonna be a short pullback and it's not gonna drag in the daily too. Because let's face it, if the 4-hour pullback becomes too strong, it could cause that the daily bullish cross becomes another fake out after the first one. And we don't want that because we have, according to the CPR model, a level of support at 86.5. Unfortunately, below 88, there's very little cushion. We have said that in previous videos, but I'm gonna reinforce it. You see in here, the move to the upside from 70k into pretty much 90k, that's a range of 20k, was very fast. That left in here fair value gaps that accumulate liquidity and imbalances. What that means to you is that the best that we can do in this market is do a fake out, take the liquidity at 88, 89, turn it into a liquidity hand, meaning that we are just trapping shorts in here, and then from there, thanks to those shorts, thanks to the liquidity, their stop losses being placed in here, we can make a quantic move higher into even above 110k. That is the happy ending, basically. It's not guaranteed, but it's a great recipe that Bitcoin loves to trap the shorts and uses this as a spring to hit higher. Of course, this could continue creeping up, but at the moment we have the 4-hour against us. So we need to start preparing for alternative options to achieve that. And the problem is if we get to 88, 89, and we carry on going lower, we get to this final line in descent. After this line, everything that is below that 20k space is almost like a black hole. Whatever enters in here appears from the other end. And that is because there are so many fair value gaps that there is very little cushion for the price to be safe there. Of course, nothing is guaranteed, not even the transition from 90 to 70. Something could come in here, a big order to buy and create some sort of market manipulation in the middle of the fall and then still become a liquidity hand. But be aware that structurally, this area, the price has very little cushion as we currently stand. So ideally, 88 bounce back up. The CPR model says the opposite. The CPR model says in December, you touch the first resistance at 108. Therefore, you should continue doing so in the next month. That is pretty much an extension of the principle the trend is your friend, right? You are in an uptrend, you should continue in an uptrend. And so far in here, sure, this high is not as high as this one, but we haven't put a low. We have had just a move up, and each and every low is at the same level, more or less at 92k, which is another reason why we decided to enter in a long around there, just buying support. So if CPR is right, we should be heading towards 104.5. But again, 4-hour and longs are stepping back. And now the question is, are they stepping back to break below 92k or just to put a higher low? We'll have to see. Let's go to the 4-hour and let's see what's the damage that the 4-hour is doing currently. The 4-hour has made a full journey from the 20th of December, from 23 all the way to 67, creating in here a breakout and a fake out because it went beyond the global resistance on the RSI, and immediately after doing so, it broke back down and it lost this support. What we said in the video yesterday is, since we broke down in here and we've been seeing after every single breakout some sort of move down, breakout, move down, breakout, move down. It's been incredibly manipulative every single move in the 4-hour. So I have reasons to believe that after this breakdown, we could still push to here. And that is not just an empty assumption that comes from data. If you go to liquidity pools, you can see in here at 100k, there is quite a large pool relative to what we have, even going 6k down. We just need to move 2k up and we hit that 100k and we liquidate all those shorts. So based on that data, I am allowing myself to believe that regardless of having lost the momentum of the 4-hour, we still have the chance to produce that breakout. Whether it's going to be another fake out, impossible to tell, but 100k is somewhere in here in the RSI. Does that mean I bet everything on it? No, I have one order long from 92k and I'm willing to ride it further to see if that 100k comes at the rescue and we continue aiming higher thanks to the liquidity pools coming from the longer term chart, which we're going to see just in a minute. Currently, the 4-hour, it is in a channel down, but relative to all this move up, it looks like a bull flag. That's another reason to believe that potentially we can pinch the resistance at an RSI of 66. Let's look at the price. Where is RSI 66? That is located at $99.200. So if price was to hit once again that same resistance, that will mean that the price on the 4-hour needs to go to 99.1. Now, looking at the price action, you can see that this will be pretty much the fourth time time. One time, twice, third time in here, and then fourth time that we aim for the same. And that's why I'm still attached to that long in case we break to the upside. For your awareness, that long is a small position that still takes into account the chance that we go for the liquidity at 88 to 89. So we got this entry, we are in profit in here. If we enter somewhere in there and we get the liquidity hand hypothesis playing out, we get an average between these two things, which is gonna be somewhere in here, and we expect a push up. If that fails as well, we got a third order, which was also mentioned in the previous video. If the theory of breaking out fails, from the point of view of RSI, we mentioned yesterday the median that currently is at 51, and we mentioned the 38 being support. So we got 51 being the median, we have 38 that is currently going up, that's why we need to update it, and the 29 is at the same place. So we get a conservative move down to 97, then we got 95 and a full reset at 92. In theory, either of them that we manage to get will mean that we are still forming a structure with higher lows for further continuation. But if we pierce this and we turn it into resistance, that pretty much guarantees the 88 to 89 target. On the daily, today we're having a big battle. The battle is to reconquer the point of control. Point of control is the area more traded when it comes to volume in a trading range. That will be bullish for multiple reasons. Starting with being at the top of the range is bullish, being at the bottom of the range is bearish from the point of view of a volume profile. So if we held 97.4, we have slightly higher chances that we can continue to 101. Ideally, this time if we break out and we do a retest, we don't come back down as we did in here. What we should be doing is hold 101, 102 in this case, and continue higher. If we fail once again the point of control, we start increasing the chances to actually fulfill the full target of getting to the bottom of the range at 89. That is what this liquidity hand is saying. It says you broke out outside the range. You were supposed to continue going higher, but the bulls couldn't make it. They were not strong enough. Therefore, you came back inside the previous range, and the typical outcome of that is another visit at least to the bottom of the range, and in some cases only to the point of control. But we can see in here 3 days we tried to hold that, but we couldn't. So that is why it's extremely important that we conquer the point of control and we continue going higher. That is not just from the point of view of volume profile, but also because we need to take this high in here and start getting rid of this very structure of lower lows and lower highs. We need the price to find support somewhere in here very quickly. If we go below it, that's fine, but let's reconquer it and let's surpass 100k, as simple as that, and let's go to the top of the range. That immediately puts a higher high, takes out this high, and then hopefully the new lower low, it's also above the previous lows. Very simple. On the daily RSI, the next target is to go to 61 and to break above the local resistance in there. That is not the forecast. That is actually what we need to achieve for the daily to start looking bullish once again. At the moment, it's still in a channel down. It lost the global support on 18th of December. On the CME market, the price closed at 99.1. On Binance, that is like 98 point something. And if over the weekend we move down from the point of view of CME, that will leave a gap. So when CME market opens, potentially we could come back up to close that gap. The problem with using that resource at the moment, which we sometimes call an insurance kind of alpha, is that for that to play out, the price on Sunday needs to close below that 98k to be able to generate some sort of gap. Let's say it closes at 95 or at 94. Sure, people are gonna be happy that we have the CME gap to the top, but from the point of view of the weekly time frame, that breaks the structure in a way that I wouldn't like to see. So in this case, this particular weekend, I don't want to go lower in the price for the weekend to then close later. I will much rather that we go lower in the price Monday on market open than we do it over the weekend, because that damages the weekly structure. I'm gonna show you that when we get to the weekly time frame. So here we have the weekly time frame, and you can see just by looking at the price action that this candle is doing an heroic effort to overcome the resistance of 97.3, which was previously support and resistance multiple times. And by doing that, we start opening some hope for the price action to use this as a bull flag and to start overcoming the 104 highest close in the whole history of Bitcoin. If we close the weekly below this 97.2, that makes it look for a second time as a rejection from 97.2, and therefore people are gonna start eyeing 80k literally, because somewhere in here is the bull market support band, and the narrative is gonna start flipping on whether the bull market support band is gonna hold us or not. And in the previous cycle, all this area based in the timing, October, November, December, January, and all the way to May, we never touch the bull market support band. So at this point in time in January, to start touching that area is gonna create a lot of uncertainty. The difference between 2021 cycle, if we go to 2027 and we look at January, we actually hit the bull market support not just once in January, but also again in March. And we continue to do so all the way, which gave this particular moving average band the name that it's got. In this cycle, you can see how disrespectful the price has been to the old bull market support band. And not just to the bull market support band, but also to the short-term holder realized price that used to be very strong support. Now it became kind of a joke in all these areas, being multiple months below it. Let's stick to the weekly time frame. I mentioned that if we use this resource of going below the closing price of Friday on CME market and we create that gap and then we use that to come back up on Monday, that implies that on Sunday we have to close the price lower from the 98k. We say 94 as an example. By doing so, if price now goes to 94, 90, 93, the RSI weekly will come down below the yellow line, which is something that now has been doing some progress in terms of recovering, being above it. This is the full bull market. This line was respected in July 2022, November 2022, December, and then in 2023 in September, and we lost it in June. We recovered it in November, and now in December we lost it again. So it's kind of positive that we are at 68, approaching that 70 to potentially have another move up, but closing back below it and turning it into resistance thanks to the price moving to 94, 93 on Sunday today wouldn't make the weekly time frame look good from the point of view of RSI. Number two, from the point of view of stochastic RSI, which has already confirmed a bearish cross and is on the way down, and from the point of view of the price action itself by being rejected by this line, that by being at 94, 93, obviously it will look like a strong rejection. And regardless of everything that's going on at the moment, the large whales continue to be in the area of accumulation. The ratio of deposits versus withdrawals is indicating that so far they've been withdrawing more than depositing at 0.55. That is really great to see that they are acting in a contrarian way towards all this bearishness coming from different indicators. And same, it's good to see that on Friday we closed with a massive inflow on the Bitcoin ETF, and same for Ethereum. We already look at the short-term liquidity pools, and I promised I was gonna look at the longer term. And with this setup, I have already covered yesterday, so I'm gonna be very quick, not too much detail. If something is not very clear, watch the videos in the past 2 days in my own channel. And the main idea is the same. When we were hitting 100k in here, there was a vacuum of volume from liquidity pools, stop losses, accounts that can get liquidated in this area. You can see that it's just black. There was liquidity, but it was very small relative to what we have now. So it has increased from a total of very low numbers now into blue, which is low but larger than what we have in this vacuum below the price, at least until getting into 91.5. So the price needs to decide now something very simple, and not the price, the market maker. We are approaching for the third time 100k. Market maker needs to make a decision. Are we gonna just liquidate all these positions in here and carry on to the next level that increases incrementally until it gets to 113.5 and you get the big price until 118? Or should we just go for this one that is larger but slightly further away, 8.5k going down, versus this one that starts immediately 2k to the upside? On the shorter term, we have the 100k, which is located pretty much at this horizontal line. So my bet, and the reason I keep the long with a small volume position open, is because I believe that we could do plan 1. We could also go and grab the short term 100k and then hit this, or we could just leave the 100k and not touch it and go and take 88k. The main point is, if we get to 88, 89, all my eyes on is let's not enter the black hole in here. We don't want a fast and cheap journey into hell, ideally. Reminder that in this area in here, there is a CME gap around 77k, and that's one of the reasons as well that I also have an order somewhere there. I think the trick in here is to find a way to trade this into spread out your volume, your bullets, so that you can take advantage of the most likely scenarios that we can envision, which I already explained. Number one, going high higher and start liquidating everybody at the top. Number 2, pinching the 100K and then going to 88. And number 3, going straight into 88. That is for short term. Longer term is if we get to that 88K, what happens after? Do we just produce the liquidity hand and then we carry on going higher? Or do we just fail and go into 70Ks and we cause a drawdown of 40% at this time in the cycle? Well, anything can happen, and I'm not using any sort of crystal ball, so I have no clue what's going to happen either. But based on the timing in the cycle, we shouldn't be doing the worst case scenario at this point in time. But if you've been watching my channel for a long time, you know that I always plan as well for the worst. And I think a good way to stay in this space is if you do that. And I'm not saying don't buy. I'm not saying put all your bullets with a position in the worst case scenario. Notice that. I am saying a good combination of orders that allows for a retracement or even a move slightly way beyond with some cash on the side is always healthy to consider. This area in here, I already called it yesterday as a very high risk area to start along. I wouldn't enter along here. No one can convince me of that. I already entered, as I say in the previous video, at 91.8. So let's look a little bit more data that I consider relevant to see how things are progressing over the weekend. Yesterday, we noticed that the asset liquidity was diminishing, and we say that if we turn into the blue, this could make another move up. So far, it has just stayed sideways there, nothing new. The moves of the price in this time frame, which is the 1 hour, is also looking like a rolling over, is bearish, similar to the 4 hour that lost the support. Let's look at the delta liquidations on high block capital 2, and I can see that this stays at high levels. Although we were seeing 500K, I don't know why this made such a big discount. It went to 287 on Bitcoin. Sometimes they do some normalization in the calculations. This was yesterday 550, now is 320 showing yesterday, so it's nonsense. I guess the point is that it went down, decreasing that risk for the longs. The selling wall pulled out on the 3rd of January. It was located at 100K with almost $200 million on Binance, pretty significant relative to all the selling walls we have seen in history. The largest one has been 320, placed the first time we hit below 100K. That is the one that you can see in there, and looking at 3 years in the past, nothing comes even close in all this area. Okay, let's go to the delta, one of the stars of the show when it comes to alpha. Every time we hit this trend line at the top, it's been a great area to sell. This is a ratio between longs and shorts that I use in the website Trading Light, and we use it for trading pretty much like if it was an RSI. We call this overbought, oversold, but this doesn't come from the price action. It comes from the ratio of how many longs and shorts there are in the market, in particular in Binance USDTM accounts. And what we've seen is a breakdown. This means that we have seen a significant reduction in terms of longs in this area right after hitting once again the golden sell from the resistance of the trend line. So the question is, will it follow the trajectory down all the way to reset? We had that conversation yesterday, and I say I don't think we're gonna get that low, but possibly we're gonna reset somewhere in here, in which case that might be a buying opportunity if it plays out. But what I know is hitting the trend line at the top still remains to be an incredible selling opportunity, like every single peak in here, and even going all the way back to August. And this is the liquidity of the past 30 days, which now shows that 103K has become extremely high in terms of cumulative liquidations of shorts. And this is good news because relative to what we are seeing in the past 30 days below the price, it's showing that it's becoming slightly more attractive. And that is precisely what we want to see. We want to see from the past 2 times we hit 100K, we have accumulated more shorts, as you can see in here. Precisely on the 26th of December is where all these people started entering in shorts, creating a breach for the price to make it much easier to go higher. Think about all this liquidity as if someone was putting oil in a pan to prevent frying eggs getting all stuck in the pan. Thanks to that, now everything is very smooth, no sticking, so the price can go beyond that. And I don't know why am I finding these metaphors that are making no sense now that I hear myself. So from a point of view, this is good news. No single alpha by itself will play out. You need confluence of things, and unfortunately at this time in the market it's becoming really tricky, a lot trickier than what we used to trade during the megaphone pattern, to take the longs, to take the shorts, trading that range. At the moment it's not clear whether we are in a range or in a bull flag and we are gonna break out. And not just that, but from the point of view of technicals like fair value gaps, that is calling for a move to 808k. You can watch my previous video to understand this pattern, but I'm a little bit more worried about certain external factors on Bitcoin that imply that we have enough liquidity to produce another leg up in the market, starting with the balance sheet of the Fed that they are selling, okay? What else do I need to say? The Fed are selling, and they haven't produced a lower low relative to what they sold in September, but they sold enough to get rid of all the assets that they acquired from September up until October or November. And that is far away from the breakout that we are expecting to see. So that means that one source of liquidity that we were hoping to have on our side is not there. The M2 continues to come back down, and that's why every time I take a swing trade, I do it with DCA orders or with some sort of risk management to protect me against the fact that the liquidity, instead of being accumulating and growing, and Bitcoin is a hoover of liquidity, is going away from the macro economy. And it's been in that state since September. And Bitcoin eventually suffers from that. It can rally against that, but not for a very long time. So I'm not saying this is the top of the market. We can still have another leg up. I'm in a long, so don't call me a perma bear or anything like that. I am just saying the risk is elevated. Let's act accordingly to that. Let's not just ignore everything and become dumb traders that just follow every single influencer saying buy, 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 buy. If you're watching this video, I assume you're not here for that. You're here to hear about data-driven alpha that most of the time plays in our favor. DXY dollar rallying up until 109.5 is bearish for Bitcoin. Gold had a little bit of a rally, although there was a rejection at 2.6, which is not that great for gold, but better for Bitcoin. But we need gold really to continue going lower into 2.2. In that trajectory, everything is great for Bitcoin. Nasdaq and S&P had a small recovery in this area, but for example, Nasdaq is battling against an extended number of bearish divergence coming from different indicators. That's the hive signal. And I think the markets are a little bit spooked at the moment with the fact that the Fed is not necessarily announcing more than one rate cut. That is also something that people didn't want to hear. I expect them to eventually need more than one rate cut in 2025, but at the moment the markets are reacting to that, in my opinion. And in the past two videos, I've been covering the monthly RSI analysis. I strongly encourage you to be aware of these things. If you are a holder of Bitcoin and you're thinking Bitcoin needs to go to 400k, you need to do two things. Watch my two previous videos and get a psychologist, get yourself some good therapy, and stay away from influencers that just call out for higher prices just because. I still think that we're gonna put higher prices, but these patterns are extremely important, and of course you can ignore them, but do that at your own risk. Guys, if you like to trade on an excellent exchange, you need to make a good choice. There are exchanges and there are exchanges. In my opinion, the two best exchanges from the point of view of how many coins you can trade on them, not just on spot, but also on future perpetuals, getting a good quality of service and access to trading bots and other additional products. For that, I will pick indeed to open two accounts, one on Bybit and one on OKX. And by using the links in the description, you get access to the largest bonuses in the crypto industry. You have 20,000 on OKX and 60,000 on Bybit at the moment. You also get discounts on trading fees. But if you want to open an exchange account and not need to do KYC, which I think is fair and also very useful if you want to have multiple accounts with different emails, no need to use a VPN, withdraw and deposit crypto whenever you want, then I will give a look at 2bit and Bluffin. Both of these exchanges are my preference when it comes to non-KYC ones. Both of them with large bonuses and discounts as well. All the links are in the description. Tomorrow's update goes into the Trading Parrot channel. Remember to subscribe and hit the like. I'll see you there. Bye bye. Take care.